We are taking a well-informed look into the week ahead in finance now with Scott Phillips, Chief Investment Officer from Motley. Scott, good evening to you. All eyes on Thursday, the first time the unemployment figures will take in the full impact of the lockdowns. All economists, I think, expecting a jump. What sort of rise is forecast?
Yeah, Peter, good evening. It is going to be an uncomfortable one. At the moment, we're looking for a rise from 4.6% back to 4.9%, effectively back to where the numbers were before last month. There is some concern we might actually top that number. We may have a number with a 5 in front because, of course, we know that 60% of the nation's been in lockdown of one form or another now for many, many weeks. We've seen the payroll numbers last week, not great. They probably will be reflected in the unemployment numbers, unfortunately, when they're released this week. OK, those figures come after an important speech on Tuesday by the Reserve Bank Governor Philip Lowe. Up to now, the RBA has remained quite upbeat about the economy. Has there been anything recently that could have changed that feeling? That's a really good question. Look, at the moment, I think we're probably doing OK. We know the RBA minutes last week basically suggested they're expecting a really quick bounce back from the downturn. So if that remains their sentiment, I don't think there's really been anything new since then to change their mind. Of course, anything could happen. We may well see some new data or simply just a change in mind of the RBA. But given that really upbeat assessment last week, I don't think much will have changed in 7 or 10 days. OK, we know whether it's the market or the economy, your key word is always confidence. And on Tuesday and Wednesday, we'll get this update on both business and consumer confidence. Yeah, if I sound like a broken clock, Peter, hopefully it's for good reason because it is such an incredibly important number. I wish I could give you better news because the consensus estimates for both business and consumer confidence are for a further fall. Business confidence probably remaining negative and going worse. Consumer confidence, the good news is at least it will remain positive. But again, that gap is narrowing towards neutral, only a couple of points away from there. We are hopeful, of course, these are backward-looking numbers. If there's been any positivity over the last couple of weeks, it has been the fact that vaccination rates are up. We're kind of moving closer to that rollback of lockdown restrictions. So hopefully it won't be too much more negative for too much longer, but that is the really big watch out, as you suggest. And a big watch on the US on Tuesday night here. Inflation figures out, not just a big bearing on monetary policy in the United States, implications right around the world. Yeah, this is the shot that gets heard around the world, Peter, as you rightly say. Inflation does hit interest rate expectations in the US. That really does reverberate. Currencies, foreign exchange is impacted by that. The US interest rates themselves, of course, have a difference. For our banks' funding costs, about half of the cost of our bank's funding actually comes from overseas, and a large chunk of that is from the US. So if they do see rate rises there, we'll see banks under pressure either for profits or to pass on those out-of-cycle interest rate increases, which is what the RBA is desperately trying to avoid. And of course, mortgage holders won't be keen to see it anyway. So look, fingers crossed that it's not a bad number. They want a little bit of inflation, of course. But if the US Federal Reserve sees it as getting out of control, they will clamp down and clamp down pretty hard. Briefly, Scott, what can we expect when the share market opens here tomorrow? Unfortunately, the US S&P wasn't kind to us on Friday night, Peter. It looks like a fall of about 1/3% to start the trading day here tomorrow. Scott Phillips, Chief Investment Officer, Motley. As always, great to have you on the late news. Thanks, Scott. Thanks, Peter.